2023 was a big year for the Indian economy. India's growth for domestic products stood at 7.6% during the second quarter. Nifty crossed the 20,000 mark for the first time ever, and our market cap hit an all-time high of $4 trillion, making us only the fifth country in the world to do so. GST collections, meanwhile, saw a 15% increase year-on-year at 1.68 trillion rupees for November 23, and net direct tax collection grew at 22% until late November 2023. But it doesn't end there. SIP contributions hit an all-time high of 1 lakh crore rupees. Yes, 2023 was quite an eventful year, but as this year comes to an end, how will the next year unfold? Well, sit back as we see what this new year has in store for us. 2024 already looks poised to be yet another eventful year with the general elections and the RBI upgrading India's GDP growth forecast to 7%. However, international growth could take a hit and come down from 3% to 2.9% in 2024. China, which saw a strong reopening boost, could be seeing a growth slowdown to 4.6% in 2024 due to the decline in both sales and construction in the housing sector. The Eurozone is expected to see a 0.4 percentage point cut to growth, settling at 0.7%. Their exports are taking a hit due to a decline in world trade compounded by credit tightening affecting investment. Currently, both Europe and the UK are witnessing a mild technical recession. Speaking of recession, even though the US avoided a recession, growth could slow down next year. Global Economic Outlook 2024 based this slowdown on factors like declining profits and household income, weakening credit and investment, and rising interest rates. Our research team expects favorable cyclical factors to accelerate in 2024, driven by the capex cycle firing on all cylinders, triggering the corporate re-leveraging cycle. Listed corporate profits are expected to approach about 5% PAT of GDP, with return on equity moving into a value-creating zone of more than 15%. Ironically, FPI holdings of Indian stocks are at a decadal low but showing signs of a reversal, while DII inflows continue. As we navigate through a classic bull market, our research emphasizes risk management and is guided by the principle that a rising tide lifts all boats. The undiversifiable market risk lifts all boats during the approach of a bull market, and here the real skill for investors would be to focus analytical efforts towards finding what not to buy. Towards the end of 2024, Nifty 50 is likely to reach a new high of
24,700.
Here are our research team's top stock picks. For large cap, L&T, Bharti Airtel, Coal India, ONGC, M&M, Indigo, HDFC Bank, IndusInd Bank and SBI. For mid and small cap, HPCL, CIE Automotive, Info Edge, PVR Inox, Green Panel, Astrum Microwave, Jubilant Foodworks and Jyoti Labs. On behalf of the whole team at ICICI Direct, we wish you and your family a very bullish and prosperous 2024. See you next year.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.